It's Wednesday, the 17th of July 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. Let's go. Hi guys, it's Any, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list. If you join my mailing list, you get priority access to my free training course that I'm creating for beginner traders, and you get weekly emails that give you all of my latest videos straight to your inbox. And I've also got a Discord chat room where you can chat to other traders about anything and everything related to trading and investment, called Pip Talk. That's the link for that is also in the description section below. Okay, so let's get straight into it. I'm gonna give you two UK, two US stocks, and I want to cover two indices as well. So,
alert triggered.
Oops, ignore that. So first thing I start off with is DAX. Now I took a long position in DAX and didn't turn out well for me. So basically what happened was, let me show you. What happened was I lost money. I lost £96 in it. So DAX, I took a long position thinking it was going to climb, and the signs were kind of there, but I didn't look at the macro level, so that's probably my biggest mistake. I took a position and it was climbing, ebbing and flowing, but it was climbing. And then around 1 o'clock today, it sold off frantically, and then it sold off. I got stopped out at £96, so I lost £96. If I look at the weekly chart, maybe I thought that maybe the signs could have been there a little bit more. On the weekly chart, the volume, there was like a MACD and RSI was kind of plateauing, and I should have seen that, and then potentially I could have made a better trade if I'd seen that MACD and RSI was plateauing. As you can see here, this kind of but either way, it was kind of going flat. It didn't look like it was going to go any higher based off of the MACD and RSI. So that could have provided me a little bit more information to make a more informed decision when trying to take a long position on DAX. But I lost some money. But we move on. So the two stocks I'm looking at on the UK front, one is Vodafone. Now Vodafone is an interesting one. We covered this a while back, and I've returned back to it today. Now Vodafone, it looks like it's still selling off on the weekly chart. As you can see here, it's just been selling off. And it looks like it's ready to do that again. On the daily chart, much of the same. 180-day simple moving average looks like it's flattening out. So it looks like price might start leveling out and potentially climbing. On the 4-hour chart, this is where things get interesting. So there was a descending pattern where a resistance was being formed where it would hit it and then sell off, hit it and sell off. Now it's broken through it and started creating like an ascending channel pattern. Now we're at the support of this ascending channel, which has intersected with the previous resistance of the descending, the previous resistance, and this is where we're at now. So potentially this could bounce up for a potential long position where you could take a little bit of profit. I don't know if it'll go all the way to the top, but you could make a little bit of profit off that. However, you do want to look at and then on the MACD and RSI, it's all telling me it's obviously oversold on the RSI, and it's kind of low negatives on the MACD, which is all pretty good signs of a long. But got to be careful, because on the 4-hour chart, the MACD's in the red, but it's done it before and it's ebbed and flowed. So I think potentially we're good for a long position. I think we're good because either way, this is the type of trade. It's a good type of trade where you're risking very little and the potential upside is a lot. If I was to enter a long position there, the stop loss would be so tight that if I lost a little bit, I could stomach it, because really and truly, let's say the stop loss is, let's say it's 2 pips. Let's make it 2 pips, even though I'd make it even tighter than that. You can potentially make 7-8 pips. So that's 4-to-1 risk to reward ratio, which is pretty good. Next one is Boohoo. This is just a recap of the stock pointed out by one of our subscribers, Demona, who pointed this out in the Discord chat group, Pip Talks, on the watch list section. So straight away, as mentioned before, the 180-day simple moving average on the daily chart is acted as a support. Price has hit it and then it started climbing up. Price seems to be climbing up. It's been climbing for 1, 2, 3, 4 days, and then it shows no sign of letting up. Obviously, it might retrace for a bit and then carry on going up as it's done here before, and that's regular. It's normal to see. Once you've seen a price climb for a certain amount of time, you will see a little bit of a retracement before it climbs again. But there's nothing wrong with that. RSI, MACD all pointing up, so everything looks good that it could climb all the way up to at least £250. So that'll give us, if you entered from here, that's 30 pips that you could be making, and you're risking about 18. So it's 2 to 1. Alright, if you'd entered early, obviously the risk to reward would have been much better, but still a good long trade in my opinion. And as long as you set a good stop loss, you can make a decent amount of profit without risking too much, which is always the idea that we want to go for when we're entering the trade. Next one is Tesla. Alright, Tesla. So I called this out early on a while back. I said around here when we were at $220 that it was going to make its way back to 260, and now we're at 260 almost. How many days later? Maybe 20 days later. Yeah, we're back to 260. Now, what do I think is going to happen next? Well, next, I think now that we've hit this 260 line, this is an old support becomes new resistances, etc. I do think it will break out of this 260 point, but I don't think it's going to do it straight away. I think it's going to retrace first and then try again to break out. I don't think it's going to break out on the first go. So I expect like a maybe 2 to 3 days of a retracement. So maybe kind of like what it did here, where it climbed up quite a lot in a short space of time, and it spent 3 days kind of going back down before it climbed up again. So it's done that same thing again. So I think it may go down to about. Okay, so this is what I'm going to do. I use my Fibonacci to kind of predict where it's going to go back down to. So from the base here to the peak here, Fibonacci has been, it's retraced back to Fibonacci. Can you see here? It's retraced down back to the 50% level. It's retraced back to the 38% level. So I think here it's going to retrace back to 23.6% level, which would give you about $240. That's where it would be retracing to. So I can see it going down to this point, and then so that's 1,500 pips thereabout in a matter of a couple of days. So that's what I think is going to happen next with Tesla. And it's a great trade to make because you can make, as I said, potentially at 1,500 pips, and the stop loss could be pretty tight. It could be about 300 pips. So that's like a 5 to 1 risk to reward ratio, which is a good trade. I do think I'm going to enter the short on this one, but I'm liable to change my mind. But as it stands, that's the one trade I'm going to enter. And last but not least is Momo. Covered this in my last video, but I'm just recapping on it as well. If it's going to plan, it's still selling off. If you go into the daily chart, you can see it's a converging wedge. So it's, every time it's hit the resistance, it's retraced back down to the support. Resistance, support, resistance, support. The support's making high highs, resistance making lower high. No, support is making higher lows. Sorry, and resistance is making lower highs. So eventually, it's going to converge up to a point where price is going to have to make a decision whether it's going to break out to the upside or the downside. But as it stands, not our business right now. What we want to do is short that to the support line for some profit. It's already gone down, consolidated underneath the 15-day exponential moving average, and sold off some more. So I do think we are in a proper short position. MACD and RSI all tell us the same thing. So it's a no-brainer for me on this one. I think this one's a short as well. But right now, I think I'm going to take the Tesla position for a short, and we'll see where we're at in a couple of days. See if I'm in the right trade. But for now, oh, actually, before I go, this is probably the most important one. I should have said this earlier, but the S&P 500 that's hit a pivotal point. If you look at the weekly chart, we all know the S&P 500 is on at all-time highs. But if you look at the weekly chart, it has actually hit a point there that it's at an all-time high, and it's hit a line that's hit twice before, and every time it's hit that line, it's sold off frantically. So I believe it's going to do the same again now. So I expect a couple of, maybe 2 weeks of selling off. It did that here last time, and it sold off quite a bit. This was a major sell-off when it hit this line. That it lost about 300 points. Last time it lost about 200 something points in 2 weeks. So this one I expected to sell off and lose a decent amount of points just based off of how it's behaved in the past. It's not just going to break through. I think it's going to sell off some more. So this is just one to watch out. And if the S&P 500 sells off, you know it's going to have a knock-on effect to a lot of these tech stocks. So this is something to take into consideration when trading some of the tech stocks. So anyway, that's any aka the Noctrader signing out.